In this video, we're going to talk about dealing with FOMO, which is fear of missing out. Stay tuned. Hey traders, a very warm welcome to you. Okay, so fear of missing out, or FOMO, is a big thing for many traders. I think you either have it or you don't. It's never really been an issue for me, but I know a lot of really good traders who it is an issue for. And how do they deal with it? So with all the things like cryptocurrencies, when they had their big bull run, we've had stock markets on a big bull run, we've had lots of other kind of shares that have just exploded. You know, how do you deal with that mental aspect of a trader where everybody appears to be making money, everybody appears to be on the ride, and you're not? So you need to look at it objectively, and with these kind of 4 strategies or tactics is a way of reframing that in your mind if this is something that bothers you and if you're fear of missing out. So the worst thing you can do is just allow yourself to succumb to the fear and just buy. You know, we saw that with a lot of the cryptocurrency boom, the initial kind of drive up higher. We see that with a lot of stocks that have got a good story behind them. There's an initial drive higher, higher and higher every day. People are saying they're making money and they can't take it anymore. They're like, I have to get in at any price. They buy, they get in. And of course, you know, that's the kind of exhaustion move we get. It's no matter what we're talking about. We could be talking about crude oil, this, that, the other. It's the same thing no matter what market you're looking at. That fear of missing out causes people to panic buy or panic sell if they're shorting. Mostly it's buying, by the way, and it just causes the whole reason the market goes to the stratosphere and then comes crashing down, whether it is longer term or whether it's the short-term pullback. And the guys who are bought right at the top are the ones holding the bag because they're trading from an emotional perspective as opposed to a systematic, calm, calculated approach. Okay, so how do we do that? How do we not get caught out? The first thing is to make a firm decision. So let's say you see the market ripping up to the highs. You've got 2 choices. You either say, you know what, I've missed out on that. I'm not going to touch it. I'm going to look elsewhere and be comfortable with that. Say, you know what, there are opportunities, a sea of opportunities. I'm not even going to touch that. I'm not going to get involved in it. It's gone too far now. I feel like I'm trading it from an emotional perspective. Leave it. Make the decision there and then. Don't kind of waffle around and go, oh yeah, maybe I'll buy it, maybe I won't. If it pulls back a bit, I will. Just make a firm decision. Say, I'm going to get in it or I'm not. If you say you're not going to get in it, stick to it, deal with it, you can feel comfortable. You can say to yourself, even if it goes off even more, I made the decision not to get involved in it. That's a perfectly fine decision to make. Not number 2, but the second part of that is if you've made that decision and you've said to yourself, okay, I am going to get involved in it, come up with a plan to enter. Now that could be any kind of thing. It could be X% pullback. I'm going to have a kind of trading limit that goes up and it's X% pullback. I'm going to have rules. I'm going to look for maybe a double bottom after a pullback. I'm going to use fib, whatever it may be. I'm going to wait for 2 red days, 1 red day, a close under a 20 period moving average. It doesn't matter. The point is having a plan. And by the way, guys, even if this is really kind of adventurous and you say, well, I want it to come back 50% of the move, what it does is it stops you from chasing. That's the main thing we're trying to do here. It stops you from just trying to panic pull buy. You write down your strategy. You say, okay, well, it's gone. I am now going to buy if it does this. So when it carries on even more and more and more, you can be comfortable and say, well, it can go as much as it likes. It doesn't matter. I have a strategy to buy. And actually, my first pullback buy is going to be even stronger the further it goes, or whatever it may be. It's having that plan of action so you're not dithering back and forth, should I buy, shouldn't I buy it, and eventually succumbing to emotion of the fear of missing out on potential profits. So having that plan. And then number 3, coming up with a plan to not miss the next. So in other words, what do I mean by that? If you've made the decision not to get involved in it, or even if you have, the second plan you make is to say, okay, what were the telltale signs that this was ripping up, that this stock suddenly took off to the stratosphere, this market, this new thing, whatever it may be, suddenly ripped to highs? What can I learn from it so that I don't miss the next? Do I need to set up some alert criteria? Does it have to be based on volume? Do I need to look at the news? How do I need to analyze new things to try and bring those to my attention earlier? And if they're brought to my attention, what's my entry strategy? Compile your plan, spend some time devising your plan, your strategy, your filtering strategy, and your entry strategy, and then tuck it away. File it away under explosive moves or new latest thing or extravagant move, you know, getting on board, whatever you want to call it. I think of something better than that, but you get the point. The point is you've got a plan so that if it happens again, you're prepared. So again, you're not feel like you're missing out. Oh, I made nothing from this. Everyone's made loads of money on this. I'm not going on a trade. I should be nailing this. No, if you've not got on it, fine. That's the way it is. It's probably actually saved you and made you a better trader because you haven't jumped on this. Now it's a new thing that's come out and you've got a strategy and a plan to get involved in it. That's when you've learned from what's happened the first time, so you're ready to strike the second time. Okay, that's number 3, guys. So number 4 is accept you need to miss many. You know, as a trader, you need to pass on more trades than you take to be successful over time. If you're taking every single trade, it means you're taking substandard things. And for whatever reason, you didn't pull the trigger on this early, is probably what's saving you from going bankrupt or broke too soon. The guys who are chasing and are getting away with it this time won't get away with it the next time. If they're blindly buying at highs and it happens to go up again and again and again, and they get out, then you know and I know that that is unsustainable. If they do that enough times, that's the one time they do it, they'll be the guy buying at the high, pulling back. You need a firm strategy with risk management, because very often FOMO guys are buying, they don't have a risk management strategy in place, and then they're coming way back down, they lose all their money, and they kind of undo all the perhaps luck they've had from the earlier FOMO. So playing it from a trader's perspective, not a punter's perspective, accepting you need to miss, you might have to miss them all. At the end of the day, we go back to kind of the trading aspect of this, is maybe your strength is mean reversion, in which case these shouldn't bother you. The fact that people are making money from these things ripping up to highs shouldn't bother you. You're like, well, my focus is mean reversion plays on this, or I'm a pair trader in this. You know, I'm not going to kind of deviate just because everyone's waving flags around and going, whoopee, how well am I doing? I'm focusing on the long-term game of making this a success. So keeping yourself focused, guys, and this could apply, you know, even for day trades. We're talking about things that are ripping up multiple days in a row and having many 100% returns, but it can happen even with a day trade. You know, you kind of say, you know, market's pushing up, you're going to buy at lows, for example. You make the decision, am I going to get involved in it? No, it's gone too far. Oh, yes, I still want to get involved in it, but I don't want to chase here. What do? Come up with your plan. Okay. Once that's kind of settled down, especially from a day trading perspective, and the market's closed, like how can I avoid missing those next ones, those nice moves off the low, whatever it may be? How can I plan to be on board those a little bit earlier next time? Even maybe a small position, taking a small position, whatever. There's tons of strategies to get on board, that kind of thing. Number 4, especially with day trading, except you're going to have to miss loads of them to get on the right one with the right risk reward, you know, the right setup, everything kind of lining up for you. You're going to have to miss, you know, a lot of them, and that's just the way trading is. You'd rather miss a load and get a good one than be taking them all, losing, winning one, and actually coming out negative at the end of it. All right, guys, so that's kind of 4 ways of dealing with FOMO. Any more you've got, chuck them in the comment section below. If you like this kind of thing, thumbs up, don't forget to subscribe. If you haven't yet already, consider doing so for more videos from me and other traders on this channel. If you're into trading, I think you'll like what we've got for you coming up. All right, guys, stay tuned for the next one. Take care, keep the risk managed. Goodbye.